Hello, everybody. This is Sungko, the Korean bro. Today is 2023, June, July, August, September 26th. And let's see what articles we have tonight, okay? 3 Warren Buffett stocks worth owning forever. NVIDIA's artificial intelligence is powering a robot that will patrol an NYC subway. Okay? If you invested $10,000 in MasterCard in 2013, this is how much you would have today. Okay. What else we have? Okay, let's see. 3 Warren Buffett stocks worth owning forever. Apple, American Express, and Coca-Cola are 3 Buffett picks that screen as potential forever stocks. By focusing on fundamentals and competitive positioning, the Oracle of Omaha has built a market-beating stock portfolio. A technological marvel, a proven wealth escalator, a top financial services play, American Express. On Friday, New York City Mayor Eric Adams unveiled the K5 autonomous security robot, a temporary addition to the city's police force. The pilot program involves the K5 patrolling the Times Square subway station between midnight and 6 a.m. The K5 is powered by NVIDIA's Jetson AI supercomputer. NVIDIA's AI tech has nearly endless use cases, many of which are little known. If you're an overnight subway rider in New York City, you might soon spot a 5-foot 3D blue and white robot on wheels that looks like a cross between Star Wars R2D2 and one of Coneheads from the popular Saturday Night Live skit. That robot, which was revealed by New York City Mayor Electric Eric Adams last Friday during a news conference, is the Big Apple's latest addition to its police force. The story about the city of New York and the NYPD launching the Nightscope K5 security robot services got much press coverage on Friday and into the weekend. However, none of the articles that I pursued told me the top thing that I, as writer for the Motley Fool, wanted to know: which company's AI tech is the brains behind the K5 robot? So searching, I went to find the answer. And as I highly suspected, the answer, which came in the form of a March 2021 night-scale press release, is tech giant NVIDIA. More specifically, NVIDIA's AI supercomputer Jetson. Yes, the name is a playful nod to the 1960s sci-fi cartoon The Jetsons. Powers Night-Scope's K5 autonomous security robot and perhaps some of the company's other models. Gizli use cases. Okay, NVIDIA Jetson platform doesn't garner nearly the press that its drive platform for autonomous vehicles or its AI products for data centers do. But like many of the company's product lines, it has an enormous growth potential thanks to the recent huge advances in AI and related technologies. Security robots are just one of the nearly endless and constantly expanding use cases for NVIDIA's AI tech, which dominates AI training and is a leader in AI inferencing. The company's leadership position is arguably the fastest growing tech today. It is top reason Nvidia remains one of the best growth stocks for long-term investors. Ford stock splits follow substantial share price appreciation, which itself often points to financial fortitude. Marco Libre's share price increased 928% over the past decade, making the company a stock split candidate. Marco Libre operates the largest online marketplace in Latin America and has cultivated a strong presence in domestic digital payments and digital advertising. Okay, Latin American retail e-commerce sales and digital payment volume projected are to increase at 13% and 15% respectively through 2027. Additionally, digital ad spending is forecasted to increase 14% in 2023. The market should continue to expand swiftly in future years. The market of Libre should outpace the industry average on all counts given its position as the largest commerce and payments ecosystem in Latin America in the domestic litter and retail advertising. Indeed, Morgan Stanley says Mercado Libre could grow revenue at 20% annually through 2027. That makes its current valuation of 5.6 times sales look cheap, especially when the 3 year average is 10.4 times sales. For that reason, investors should feel confident buying the growth stock today. Whether or not Mercado Libre split its stock in the future is immaterial. Amazon plans to include advertising on the Prime Video beginning in early 2024. This move will help fund new content that could ultimately help attract more subscribers to Amazon Prime. There are even better reasons to buy the stock, though, including its improving profitability. Has soared more than 50% so far in 2023. It's skyrocketed more than 8 times over the last 10 years. It could go even higher, according to Wall Street. Of the 47 analysts surveyed by the Refinitiv in September, 43 rate Amazon as a buy or strong buy. Investors wanting to buy the stock shouldn't uh, have a hard time finding a justification for doing so, and Amazon just gave them yet another reason to buy its stock hand over fist. There are even better reasons to consider buying Amazon stock, though. One of them directly relates to the new advertising model for Prime Video. Amazon has moved aggressively to improve its profitability and free cash flow. The company has closed down less profitable businesses and reduced staff. Adding ads to Prime Video will help offset the high cost of developing content. Stocks with strong earnings growth tend to go up. Amazon posted earnings of $6.7 billion in the second quarter of 2023, up from a net loss of $2 billion in the prior year period. That's the kind of trend that investors like. It should continue thanks to the company's renewed focus on the bottom line. Amazon has tremendous growth opportunities with Amazon Web Services. The cloud services platform already ranks number one based on the market share. The surge in the adoption of artificial intelligence seems likely to fuel massive growth for AWS in the years to come. The company is also using its AWS model of leveraging internal infrastructure to support external customers in other ways. Amazon recently launched a new supply chain service for its selling partners, and it's at Wedbush think that the service could become yet another significant growth driver for the e-commerce and cloud services giant. Cloud Amazon faced a potential problem when introducing Amazon Prime Video. Losing subscribers? I don't think so. For one thing, the company isn't raising its price for Prime membership. More importantly, Prime offers many other benefits that help retain members, notably including free shipping. Okay, Robert. After struggling last year due to macroeconomic challenges, growth stocks have generally enjoyed much stronger performance in 2023. At the same time, there are still high quality growth stocks trading just a fraction of their valuation peaks. For risk tolerant investors seeking potentially explosive plays, backing the best of the remaining bitten down growth stocks could be a path to noteworthy returns. Read on to see why two Molly full contributors believe that building positions in these leading technology and media companies would be a great move right now. Roblox is on the verge of new growth drivers. Is an early leader in the metaverse and a stock that could deliver huge wins for our long-term investors. In addition to offering games and social experiences, the platform is evolving to become a general media hub. Platinum selling musical artists have already hosted concerts on the platform, and top fashion brands host explorable spaces in the online virtual world. The company has even launched a suite of tools that turn its virtual world into an educational platform. Down 81% from its highs, Roblox looks like a smart buy on the heels of encouraging business performance. Revenue climbed 22% year over year to hit $780.7 million in the second quarter, and the company's average daily active users increased 25% to 65.5 million. The business is seeing even stronger growth outside of North America market. Bookings for the platform in Europe rose 30% year over year. The first quarter, bookings the Asia Pacific segment increased 17% year over year in the period. Meanwhile, daily active users grew 29% in Europe and 25% in Asia Pacific. The business is already posing impressive engagement and bookings growth across its core geographic segments, but Roblox has just started to tap into a major monetization opportunity. There's huge untapped potential for the platform to become a hub that can generate revenue from advertising other sources. Thanks to high levels of engagement across its platforms, Roblox has the potential to be very attractive to advertisers. The company has just started to roll out its digital ads implementation. There's a good chance that the new product will evolve into a significant sales generator. Roblox, seeing stronger engagement growth across its platform, remains in the very early stages of capitalizing on a new revenue driver, which stock still down a big from its high. Now looks like a good time to build a position in a digital content innovator. A streaming stock that stands out became a Roku became a market darling when sales soared early in the pandemic, and then it tanked as growth decelerated and profits disappeared. But while it's feeling the pressure of inflation, it operates a unique streaming model that positions it for a grand comeback, even as the major players in the streaming wars duke it out for subscribers and profits. Roku's two segments, devices and platform. The device segment covers the various streaming devices itself, including connected screens and devices that hook up streams to the internet. Every device holder has an account that brings them into the Roku ecosystem. While devices aren't a huge part of total revenue, accounting for about 20%, Roku's operating system is the top one in the US and gaining traction internationally. As it onboards new account holders, Roku new eyeballs for its free channels, and that's where the real opportunity is. Cord cutting is still a phenomenon, and Roku's climbing new viewers is still away from traditional TV and cable. More viewers and viewing hours turns into more advertising dollars. Active account increased 16% over the last year in 2023 second quarter, and viewing hours increased 21%. Total revenue increased 11% with similar increase in each segment. The challenge right now is that even though advertisers are moving their money over to streaming, they're cutting their budgets due to their own cost cutting efforts. But Roku is well positioned to keep up growth uh, as viewers move over with a model that has years of growth ahead through increased advertising revenue. In the meantime, Roku stock is 85% off its highs from 2 years ago, but it's already up 76% so far in 2023. As investors sense the opportunity, now is a great time to buy it as it comes back up. Okay. Warren Buffett has put $150 billion of Berkshire Hathaway's cash to work in this four stocks: Chevron, Bank of America, Apple. Tesla's revenue increased at an impressive rate last quarter. Hmm. Pricing cuts have hurt margins, but they are still better than legacy rivals. Investors should expect a repeat performance over the next 9 months. Although Tesla shares are currently 40% below their all-time high, a level that was reached in late 2021, the disruptive industrial leader has seriously rewarded its investors in 2023. If you were smart enough to buy 1,000 mm, worth of Tesla share at the start of the year, you'd have about $2,000 right now. Talk about an outstanding nearly 100% gain in such a short period of time. I'm sure any investors would have loved to own this electric vehicle stock over the past 9 months. For what it's worth, the tech heavy Nasdaq 100 index is up 34%. It's clear that investors are turning even more optimistic again when it comes to Tesla. However, the business is dealing with some challenges at the moment that should be understood in light of its big picture story. Based on the stock's significant outperformance this year, it looks like investors are shrugging off the softer profitability trends and muted outlook for the rest of the year, instead keeping their eyes on Tesla's optimal vision. The objective is to develop a worldwide fleet of autonomous robotaxis that can earn extremely high margins for the business. That's why Tesla is working so hard on its Dojo artificial intelligence powered supercomputer, which can help advance progress toward building out full self-driving capabilities. The company wants to be a leader in AI, and it thinks the perfect use case for it is in its vehicles. A long-term autonomy would think is going to just drive volume through the ceiling next level. There are so sort of future robotaxi projects, dedicated robotaxi projects we think have like quasi infinite demand. Musk posted on your call. Investors who believe in this long-term outlook might still consider buying the stock. While I don't think Tesla will repeat its 2023 performance this fall over the next 9 months, I can see why some bullish investors will still hop on the bandwagon today. Despite the company's already massive market cap and still valuation, the upside is extremely large uh should Musk make good on his grand ambitions. Hmm. About laboratories. Hmm. Let me read the four articles and then I'm done for it today, okay? Hmm. It's been a rough half of the year for the S&P 500, with its split slipping nearly 3%, but that's not stopping analysts from calling for an amazing next 12 months. Wall Street analysts are expecting monster rallies in the next 12 months in the 10 S&P 500 stocks, including Solar Edge Technologies, Insulate, and Dexcom. Oh, oh, hmm. Uh, target rate upper bound. Okay, let's read this one. Okay. Hmm. Okay. Uh, Minneapolis Federal Reserve Bank President Neil Kashkari said on Monday that given the surprising resilience of the U.S. economy, the Fed probably needs to raise borrowing rates further and keep them high for some time to bring inflation back down to 2%. If the economy is fundamentally much stronger than we realize, on the margin, that would tell me rates probably have to go a little bit higher and then be held higher for longer to cool things off. He said at an event at the Wharton School of Business, a recording of which was made available late on Monday. Okay. The Fed last week held its policy rate steady in a range of 5.25% to 5.50%, but signaled it is not likely yet done raising rates, with one more interest rate hike by the end of this year seen as likely appropriate by the majority of Fed policymakers. One of those folks said Kashikari, who is considered one of the Fed's more hawkish policymakers. U.S. central bankers also indicated they are likely to keep rates high longer than earlier thoughts, with less than half expecting to cut rates below 5% next year, and one indicating the policy rate all to end 2024 above 6%. Hmm. Hmm. Kashkari said that if inflation cools next year as expected, the Fed will need to cut rates to keep policy from a tiny too much, but he also said he has been surprised by how well consumer spending has held up despite the Fed rate hikes so far. Everybody's on federal open market committees commented to bringing inflation back down to the Fed's 2% target. He said inflation by the Fed's preferred measure was 3.3% in July. Mhm. So okay, I get it. So like according to this guy, it is expected that we could see another interest rate hike at the end of this year, and he's surprised by the fact that everyone's holding up pretty well, and Federal Reserve they're pretty much confident that regardless of interest uh, rate hike. Uh, we won't have like go through hard times as much as they had expected. It's what it is. All about this article. Hmm. Uh, there's not much to read. Hmm. Yeah, what I noticed just now from reading articles is that normally I would read articles written from mollyfool.com, but now that I'm reading articles from Yahoo Finance. Yahoo Finance are more like focused on economics, whereas Molly Fool is like more focused on like fundamentals of companies. So, mm, especially like hard times these days. I think from time to time it's better if I just read hmm, articles from Yahoo Finance because they actually give you like big pictures, like what's happening in the world and like what goes around and like what interest rate are expected, stuff like that, and like how experts say about stock market, like in overall. Okay, last but not least, I'm going to read this article and I'll put an end to the YouTube live. Okay. Hmm. Diamond warns. I don't know who Diamond is. Like anyway, he warns that 7% rate Fed rate still possible. Times of India says okay. Markets may be predicting the end of the Federal Reserve's tightening cycle, but Jamie Dimon is still telling clients to prepare for a worst case scenario of benchmark interest rates hitting 7% along with stagflation. Okay. We urge our clients to be prepared for that kind of stress. The JP Morgan chief and CEO said in an interview with the Times of India, saying a hard landing remains risk for U.S. economy. His comments contrast with the consensus view after 5.25 percentage points of hikes that lifted the benchmark rates to 5.5%, the highest level in 22 years. U.S. policymakers have signaled that rates will need to stay higher for longer to counter inflation, though many markets are pricing in cuts from next year. The highest forecast in a Bloomberg survey of economics last week was for 6% at the end of 2023. Wow, who has said rates may need to rise further to fight inflation, added that the difference between 5 and 7% would be more painful for the economy than going from a 3% to 5% was. Wow, if the key rate climbed to 7%, it would have serious implications for American business and consumers. Already, economists put the probability of U.S. recession over the next 12 months at 55%, and it's more optimistic than Bloomberg economists' prediction of a slump estimates this year. A rate of 7% would those recent optimism among Fed officials about their ability to engineer a soft landing in the economy with the unemployment rate still very low at 3.8% and signs of price easing. The world is certainly not prepared for 7% Federal Reserve funds rate. At the level we would expect that we would have a deflationary asset unwind. It will burst a lot of asset bubbles. It just simply wouldn't be sustainable. So this guy expects 7% Fed rate, and he says it's still possible. But if that Fed rate uh, becomes reality, then things are going to be really tough. Um, it's gonna cut off people's guard. Mm. Certainly, things are not going well. Mm. I mean, like 0 to 2% increase is not going to do much, but like 0 to 7% increase will do a lot of things. It's what it says. Mm. Okay, this is it for today. And I'm gonna see you. I'm gonna see you tomorrow or the next time. Okay. Uh, mm, Uni? Mm-hmm. Mm, okay. I'm gonna see you next time, okay? See you and have a good night and bye bye, and everybody. Okay, bye bye.